the microphone was turned off. Oh, hey everybody, I'm your boss, Joe Boss, and I know how to use a microphone. Hello. I was just saying, I tried upgrading my operating system today. I'm on Omarchi, and they just had a big fat release of all these new features for Omarchi 4. I watched the video that DHH posted going over all the new features. I really look forward to it. I tried upgrading to it to the 4.0 version before the stream today, but it only took me up a minor version for some reason. So, hello Harold, and again Annie. Nice to see both of you in the chat. Man, I don't know why it only did a minor version upgrade, but I'll be fixing that probably after the stream, doing that full version upgrade, figuring out what's the deal. Why is there only a minor version upgrade? And just a 1-2 check on the mic. Everything sounds hunky-dory, or everything sounds great. Everything sounds good. I see the hearts coming in. Thank you very much. Okay. We'll get into the chat. Man, I was just bored as all hell yesterday when I made the stream title. I'm gonna log. And I put the thumbnail to the video, this trade plan we did in the last stream. I just need to switch on over here. Oh, hold on a second. The screen capture is not screen capturing the correct thing. There we go. Now we got trading view properly screen captured. There we go. So this was last week's trade plan for NASDAQ. Actually, I have the clip over here in Discord. I believe I posted it in the... Yeah, I posted it in my boss trades section here. Oh. No audio. There we go. Now we got audio. And right now, NQ is in the same scenario. Like, it's very straightforward. It's me over me. So hopefully nothing crazy. Just some volatile chop going sideways here. Yeah, and then this next part. Nothing crazy. We can look at the week ahead. Yeah, there's the week ahead. This is last week's stream, by the way. Yeah, probably 3,200 next week. Using the range probabilities. And 29.6. That'd be great. Just to tap 20. Notice when I'm doing this trade plan, I'm not drawing any lines on my chart other than the arrows into the future, right? I'm not drawing any lines of support and resistance. I'm not looking back into the chart's history. I'm not pulling up any other indicators. I'm just using range probabilities here to figure out, okay, generally speaking, where does the low and where does the high for a given day, a given week, a given month come in? What are the probabilities of finding the high, the low, the close at certain prices the following week? And then when you are also reading outlooks and updating your expectations along economic events, you're able to say, well, things are probably going to stay bullish unless there's a terrible thing that happens. Maybe we should stick with a more bullish expectation. So vis-a-vis 6 and then rip to 30.2. That would be nice to do something along these lines here. And then there's the arrows. Red. And then there's the other arrow. And we can do a quick little review. So there are the arrows that we drew last week on NQ. And when in last week's stream, I said something along the lines, I think in gold, was it? No, it wasn't gold. It was something else. Maybe it was oil. No, it wasn't oil. But there was an asset that I was looking at, and I was saying, hey, when I set trading expectations with these arrows, I have... I want to focus on making sure that these arrows are correct in price and in time. And these are perfectly correct in price and in time. Perfectly correct. And that makes me very, very happy because I was just like, okay, it goes there and then it goes there. And I'm like, well, okay. Joe, why did you pick those bars to stop the time at? Why did you pick those prices? Well, honestly, it's very, very, very simple. Slap on the range probabilities, and here's the range probabilities for the week. So I was expecting we hit this peak, which is the nominal spot to find bullish, really directionally bullish entries right around here. At this price, note that this isn't about time yet, at this price, and then look at that, most of your tops for the week come in right around here. Now, what about timing? Because this just helps with price. What about with timing? That's where we go ahead and slap on the timing dots. And look at that. Given this low, and if we use the replay feature, given this low, this is where you find most of your tops for the week. And after you trade for a long enough period of time, you're like, well, generally speaking, when price comes down about this much, if this actually in fact becomes the low, and if that truly is my expectation that we get a low to around this point, then therefore, if I'm a bull, I should expect the top to come somewhere around this cluster of where we've had prior tops come in, given lows around here. So when the low is around here, generally speaking, we've found the top somewhere in this cluster. Yeah, not really the end of the world, right? So it makes sense, like, okay. And then you go ahead and you slap on your range probabilities on top of that, and look, here is your range probability where you find most of your highs. And now we can toggle that off real quick. And you can see most of them are actually right around here. So if I was strictly using this indicator, I would probably set my arrow something along these lines now. And I'm going to, real quick, just delete these here. Now let's go ahead and step forward. And honestly, that wouldn't have been a bad expectation either. Just setting the arrow into the dot cluster was enough to be correct. Honestly, setting the dot here, here, here. The truth is that the price, see how we're just changing the time? So the timing dots help with figuring out the exact bar. But for this particular realization, there were 4 bars here that all would have worked. So this is pretty easy to set an expectation for this in hindsight. But man, that was actually kind of nuts. Although, again, having the ranges say, hey, your top's usually around here, and then we actually top out there helps a lot with setting the actual price and then using the timing dots to actually find out the low. Great, great, great. Also, we can turn off future highs, so then you can actually see all of the dots, right? Over time, we just have this feature here, only future highs, only future lows. So then it doesn't keep dots that are like way back there. Okay. So that's all well and good. Nice follow-up, nice trade plan, nice realization there on the NQ side of things. Now, let's go to the FX side of things. We had some moves on the DXY. DXY rolled the hell on over. And I would actually like to get my Discord back, because in the Discord, I actually created we had a little discussion. DXY. There should be drawings on this chart. Yeah. So we had bearish expectations here. They came in way too late, so these expectations were not met. If this is the top for the month on DXY, then we should probably expect something along these lines here. So let's go ahead and do that. Let's set up that expectation. I am ready to be a bear on the dollar. I am ready. And then we are 14:15. That's the timestamp. Ready to be a bear on the dollar. Okay, oil futures. Oil is in a bit of an interesting spot here, honestly. It's gonna depend mostly on how things go with the Strait of Hormuz and now the Bab el-Mandeb. Let's see here. Yeah, it's hard to assume. I have some notes. It's hard to assume we're gonna get $100 plus barrel oil when there's still a lot of oil actually going through Iran still. If you want to see exactly what I mean, you can go here to the Iran commodities thread in the Discord, and you can look at a handful of these things that we got going. There's a lot of construction going on to circumvent the Strait of Hormuz. There actually was in the, I believe, Strait of Hormuz thread, where RA is back and we're actually following updates. Right here. Yeah, this right here. This actually covers the shadow fleet that has been taking a lot of the oil out of Iran and out of the, I believe, not Persian Gulf, Arabian Gulf, right? Also, I'm going to turn the music down just a tad. It's a bit loud for my taste, my ears. Ooh. Okay. Essentially, there's a lot of ships that are still getting past the Iranians, and the estimate is 7 million, 9 million barrels per day. So there's a lot of oil getting through the Strait of Hormuz that just straight up isn't being tracked. And actually, one of the reasons why it isn't being tracked is because the satellites, just 2 satellites are watching the Strait of Hormuz. And they don't take multiple pictures per day. The market is left with a single snapshot every 3 to 5 days of the Strait of Hormuz. So unless you literally have spotters at the edge of the strait, or you have your own surveillance watching every ship go past the strait and you have your own proprietary way of doing that. You know, you're paying someone to watch all the ships crossing the strait, and you know for sure they're not double counting ships. You know for sure that they're not missing any ships that are going dark, trying to cross the strait stealthily, right? Then sure, you'll have more accurate data than the rest of the market, frankly. But a lot of the more negative analysis on how many barrels per day is going through the strait, it seems like it's very clearly an underestimate at the moment. And now we're getting all these new infrastructure projects and actually more oil drilling in other countries that are going to help with deprioritizing using the Strait of Hormuz for a lot of these countries to actually sell their oil. So in the end, it's not going to be so hot for the Iranians on that front. And we were talking about that because we were looking here at the oil chart. So all in all, I wouldn't be surprised if we stayed between 90 and 70 kind of for the foreseeable future here, for going, hell, all the way into the election. Now, by the election, I mean elections. There are a lot of elections coming up in the world this November, and in Germany here in September, by the way, as well. Let's see here in New Zealand, they're having their general election. There actually was a whole debacle because apparently there was someone trying to throw out the National Party leader. The party is called the Nationals, who's currently in office, who's currently the, I believe, Prime Minister of New Zealand, Christopher Luxon. He had a challenge to his leadership of the party, or just a lot of third-partying, people talking behind his back, trying to get him out, because he was causing some issues with his communication. He was announcing policies that the other MPs in the party weren't on board with. He had a couple of political gaffes. So going into the election in November, there was a meeting held a day or two ago as to whether or not Luxon should remain the party leader and run for office again. The meeting was held, and he is now still the party leader, and then they kicked out the people who were trying to kick him out. And I could go ahead and bring up a few things. I can bring up a few links here, but I think that's going to be the kind of the extent of it. Let's see here. Burnham is going over some policies, trying to kind of circumvent some Brexit stuff. Let's set this back to 0.3. That's where I like it for FX stuff. Wow. If that actually is the low for the month, I think we're going to probably do something along these lines here. Although it's a bit too soon to say, so probably more something along those lines. And that lines up actually with what we're expecting for the dollar, right? And we'll copy that for now. Aussie dollar, real quick. We had bullish expectations on Aussie dollar. I believe we're long Aussie dollar now. We're just going to set a more moderate bullish expectation. There's high variance here, so gotta be careful in these types of scenarios. When you see high variance dots like this, it means that when the low has been here before, that the following top, if we do continue to move higher, is very volatile and quite unpredictable. So this would be the nominal expectation, just targeting where the highest probability of where tops usually come in for the month on Aussie dollar for any given month. That's the nominal expectation. So this is the nominal arrow, the nominal expectation there. It's fine. But now we have to keep in mind, hey, given the variance of these dots, given where the current low is, where future tops could come in, over the rest of this month, there's high variability of potentially getting tops in the 72 handle here. Probably in the mid 72s. So it could be something like this. And we'll leave it there. That's about 150 pips if that actually happens. And then New Zealand dollar. So New Zealand dollar had a bit of a deeper pullback. It has sprung up today. And it looks like that is the likely low for the month. I mean, you got a hammer bar. If you're into candlesticks, you can interpret it that way. But I like to interpret it as, hey, most of your lows for bullish months typically come in around here. I would kind of consider this on the later side. I like to see the low for the month appear somewhere in the first third of the period. And then you have the remaining 2/3 for the directional move, whether it's a higher volatility, and especially when it's a lower volatility move. Generally speaking, the closer you are to the midpoint of the period, whether that's the month, the week, or the day, and you find your low or your top for the month, and then you start expecting the reversal in the opposite direction, you have to also anticipate greater volatility, because now instead of that ratio I was talking about where you find your low or top for the month somewhere kind of in the first third, when you're talking about this second third here, it means you have to hit your targets kind of in this latter third. And if you get your entry here in this first third, you don't need as much volatility to hit your targets and have a decent return. If you hit your target here, which is kind of where we're at, you actually need to hit the same target. You need more volatility. And if you're over here, that's when you get like some particularly crazy months where you need essentially the move to happen in the span of like 3 days, within 3 days, generally speaking. And 3 days because that's usually half of a trading week, generally speaking. So that's all well and good. That's all well and good. So there's not very many dots, but we only have 3 dots here for when lows are around here. And you can see not only are there only 3 data points for lows in this area, but also there's a high variability between the distance of these dots. So the dots are all really far apart. So I look at this as highly, highly uncertain. Because I do have, for other reasons than what's on this chart, more bullish dollar expectations, I do feel comfortable just setting a more nominally bullish trading expectation. So let's go ahead, get the arrow, and draw something like that. And I'll use that as my baseline expectation for where I think New Zealand dollar will go. And how many pips is that? It's about 100. I think that the Aussie dollar setup looks a lot nicer. There's more data to it, backing it up. We could look at Euro dollar again. Not again for the first time. Actually, yeah. We still have very bullish, very, very bullish expectations. If that's actually the low, there's a pretty... I mean, look at the difference between what's going on here in Euro dollar and what's going on here in Aussie dollar. you can actually see the variability. Like, there's a decent number of data points here with these dots, right? But the variability is quite high. The distance between each one of these dots is quite high. When you look at euro dollar, there's a lot more dots, which is nice, but also the variability is actually smaller. The distance between any two dots is also lower. So there's actually a higher degree of certainty that I have of this type of move than I do in Aussie dollar having this type of move, which is actually half of what euro dollar is expected to do in that scenario. This is 300 pips compared to Aussie dollars 150, and then New Zealand dollars 100. So now that you go ahead and you go down your watch list with these indicators and you look at which ones have good moves, and then you have to, of course, go off and read research. You have to read what the actual economics of the country are doing. You have to understand the political situations in these countries. You also have to understand nowadays the weather, right? El Nino is making a huge dent actually right now in Europe over electricity prices, because so many people now are getting air conditioning units or spending extra money trying to cool down their homes, or just spending extra money on water and all sorts of paraphernalia to try and stay cool, that it's more spending on energy and it's more spending on different kinds of consumer goods. So you're seeing a bit more spending going on over there in Europe because of this. And, you know, El Nino gets really hot, means higher energy consumption usage. Electricity prices go up. Man, not to mention all the data center stuff, electricity prices go up. Electricity prices are going up, and that can lead to some marginal inflation depending on how the energy for that electricity is sourced, right? Another reason why we want to keep oil down. Because if oil goes up, that also means that the charge for every kilowatt hour of electricity delivered to homes in Europe, homes in the United States will go up. And we don't want that. Do not want that. Because higher inflation in a lot of these countries is generally going to make these central banks more hawkish, and more hawkish central banks right now is anti-growth, which means less risk-on moves, which means buying US dollar, selling, not necessarily selling equities, but not taking as aggressive a growth position in equities. Also, it means getting long bond yields, right? Right. So there's all sorts of things then you have to flip, and now you have to do the opposite of all of that when you're in the more risk-on position, when central banks are holding like they are right now, and potentially after enough time has passed, start to consider cutting rates. It was really, really great when one of the reasons why we actually had this big move at the end of the week is also because the Fed rate expectations for December, the December meeting this year in 2026, were finally priced out. And by priced out, I mean the odds of seeing a rate hike, a 25 basis point rate hike out of the FOMC in December, went down to pretty much nil. I can't recall literally off the top of my head exactly what the specific data point was that caused that change to occur. I have to go back and look at it real quick. So guys, this is all off the top of my head. I can only be so prepared, right, as one guy. But if you want to come and hang out with me while I'm doing research, while I'm going over these things throughout the whole week, guys, go ahead, hop onto the Discord. Most of the guys watching this likely are already in my Discord, getting notifications from that front. But if you found this through recommended on YouTube, thank you for watching this long. Make sure you subscribe and like, and use the WAP to hop into the Discord. We actually use the WAP as like a way to get the bots from joining our server, so we don't get as much bot spam as a lot of other trading Discord servers. It's fantastic using WAP kind of as that screener. Let's see. I'm just looking at some notes before continuing on here. U.S. yields expected to fall, said a Reuters survey. Some fun things. Yeah, these were just things. Whenever I'm going through my week, I have an Obsidian note that whenever I come across something, I'm like, oh, that would be something I'd like to talk about. Not even just here in streams, but at a dinner table or with friends or in Discord. Or it's something I think I should be knowledgeable of because I'm like anticipating someone to ask me about. I go ahead and I make sure I put it in my notes and I write my little thing about it. I read the information that's in there and I write out what I think and my opinions about it, which I'm finding is now really look, it's not like you got to pat yourself on the back like, oh, I write my thoughts out, but there's this viral clip or short or TikTok or whatever vertical format video that got shared. I'm really dating myself. I remember the days when you would get fucking bullied for doing vertical video rather than horizontal video. I remember those days like, dude, why are you doing vertical video? No one watches it that way. Like, don't do it. People would bully you over doing vertical format video. It wasn't until Vine that it started to become like, oh, no, dude, I'm doing it for Vine. Like, chill. Like, oh, I'm doing it for Snapchat. Okay. You know, Snapchat's really fucking cringe. A lot of weirdos on Snapchat. Man. Anyways. This video I'm talking about that I almost derailed my thought over. It's a teacher literally crying that his young black men and women, that is young brown, write like a 2-paragraph assignment. Like they are seniors going to college, and in his classroom they cannot write. And it's just a video of this professor breaking down over it. And I'm like, really? Is it? How do you go through all of school and are functionally illiterate, right? I mean, it's weird because obviously they can talk to each other and they can text, and he brings that up. It's like, but when I sit them down and try and get them to literally just write what they're thinking, I can't get them to do it. And I'm like, there's something else going on there. There's something weird going on there. There's something weird going on there. But no, I mean, hell, I've actually been doing this format of what I've been doing, I think, since like 2013. Because I used to do weekly meetings in another format where throughout the entire week as I lived my life and went through reading different articles and talking to different people, I would just be putting my thoughts and the topics I'd be interested in talking about into a text document. And then once the meeting day or the stream day came along, go ahead, bring up the document, go top down, talk about those topics. But you know, after you've been doing it for long enough, you're like, well, I like to bring up this thing about Christopher Luxon. That's all well and good. I like to maybe bring up this thing about Burnham. I'd like to bring up the stuff about oil. I have something on NVIDIA. I have something on US yields. I have like this fun things section, which talks about how there's anti-air defense deployed at a golf tournament Trump went at. And it's just kind of funny. People are golfing, and there's this giant anti-aircraft guns in the back, pointed up at the sky, rotating, looking for something to shoot at. Oh, man. Oh, this one's actually kind of fun. It's a geography lesson, talking about school, right? It's a geography lesson about how many million barrels per day go through different straits around the world. So the Strait of Malacca has 23 million barrels per day going through it. And the Strait of Malacca is right here. You know, Indonesia, right? And this is how China gets a lot of their oil. All of the oil that goes from Iran doesn't just go through the Strait of Hormuz and then it's just off to China. It has to go through the Strait of Hormuz and the Strait of Malacca. At least most of the time, right? And a lot more oil goes through the Strait of Malacca than the Strait of Hormuz. And then you have the Cape of Good Hope. Everyone knows that. That's the Horn of Africa right here, right? You have the Danish Straits. This is, everyone in Europe knows these right here. This is actually how some Russian oil was getting through, and a lot of Russian ships. Like this is, the Danish Straits are actually really, really important regarding war with Russia and making sure that you have ships in the sea here to keep Russia from getting into the Nordic countries so easily. Then you have, what is it, Suez Canal, right? We know where that is. That's Africa, right there. Rip the Ever Given, right? The Ever Given. Yeah, all the containers too. Yes, yes, yes. Bab el Mandeb, that's just across the Red Sea, right? Right there. Then you have Turkish Straits. I believe that's Black Sea. Yeah, right here. When you get into Ukraine, right? Right there. Yeah. So that's the Turkish Straits. That's also pretty important for Russia. If Russia wants to get into the Mediterranean for whatever reason, they need access to the Turkish Straits. Unless they want to go through the Danish Straits or they want to go all the way around the Arctic into the Atlantic Ocean and then come through the Strait of Gibraltar, right? Guys, it's great knowing your geography because you can actually talk about stuff competently, right? And then, of course, Panama Canal, right? And Panama Canal is not here. Oh, no, it is. It's just off the map. It's right there, Panama Canal. And, of course, that's very important for the United States. Very, very important for the United States. So I would be, if I was doing FX, which I am, but looking at the different dollar pairs, I am far more optimistic about the expectations for appreciation for the euro. I am genuinely not certain we're going to see like a 300 pip move to the upside here on euro dollar. That would genuinely be kind of insane. But I see the data, and I am not going to not take a shot at it personally. I think I'd be more in line with maybe saying we hit the higher end of 117, right? That's almost 200 pips, right? That'd be almost 200 pips by end of month. I think that'd be pretty damn good. But to see this kind of volatility, it's like, dude, what do you actually expect to create that kind of volatility? The elections in Germany are in September, the third week of September, which is like way over here, right? This is when we're getting elections for Germany, the state elections. And the AfD keep getting stronger and stronger in the polls. They're expected to win more and more and more seats. It's looking really good for the AfD. This little thing that I just brought up, this little table here, this is the seasonal dashboard with seasonal forecasts bars here, and it looks pretty choppy. So there's not that much fantastic seasonal expectations. In fact, this great big green bar that we just experienced is an anomaly. 30% of the time we get a green bar historically on this particular trading day for the month of August. 70% of the time, this bar is actually red, and you can actually see most of the time this is a pretty big red trading day. So people who just blindly trade seasonal statistics got hit here. They got put into the 30% category here, which is why you can't just use seasonality when you're trading. You have to look at the regime from the most macro and then go down to micro, depending on the asset class you're trading. So, for example, with foreign exchange currencies, generally speaking, you can stick at those most macro levels of what are central banks doing, generally how our economy's performing based off inflation and growth metrics, and then how are the politics for fiscal and monetary policy, where are they currently, right? And most of the time you can just stay at that level of analysis and understand what's going on the FX side of things. If you then go to the next level lower, which is looking at just a specific country instead of all countries and how they relate to each other, because FX are relative pairs, exchanges between two currencies, so you have to compare the economics between two countries to each other and then come to a decision. Bonds are more about, okay, what are the more domestic issues going on, not just with the macro level of the central banks and the politics with fiscal policy, but also how are the largest and strongest and most important companies in that country performing. Because when we're talking about bonds, you have this greater category of just overall debt. And you could be talking about a country's bonds and the bonds issuance, but also you want to look at the credit for housing, the bonds for housing. You want to look at credit for or bonds available for municipalities, bonds available for companies, right? When you talk about bonds more domestically, you want to look at overall debt, who's issuing it, who's taking it on, for what purposes, right? And a big component of that is housing. So when you're generally looking at bond markets, you also want to be looking at housing, because a lot of bonds get wrapped up in financing housing for banks, right? That's what banks take on a lot of those bonds for. And also issuing out to companies, right? And then the next level is equities, which have to know all the stuff above that and things specific to just the company, right? Now, a lot of equity guys say, well, that's wrong. You don't need to know all that other macro stuff on top of it to understand exactly what you should be doing in getting exposure to a particular company, which I'll agree in a few circumstances. But that's when a company's balance sheet and cash flow, their statements, right? Their financial statements are behaving idiosyncratically from the rest of the economy. People are going to this particular business for maybe something that's inelastic, that there's inelastic demand for, that they can't get from somewhere else. This actually happens a lot with clothing and style brands, where the economy might be not doing so hot for a few months, even in the United States or in Europe, but there will be this, posh brand that goes viral on social media for whatever reason, for whatever stupid or artistic or whatever the reason is. Doesn't matter what it is. The reason is it got popular. Well, that's what ended up happening. The end result is it got popular. And the company that has the popular thing is publicly traded, and now they have an idiosyncratic benefit going on instead of an idiosyncratic risk, right? That's separate to what's going on from the economy at large. And now with that extra context, you can now set new expectations for how that company is going to perform. But generally speaking, you do need the rest of that macro information to understand where in the business cycle the overall economy is, and how that could force generally most businesses that don't have those idiosyncratic benefits to behave as far as what risks they're willing to take, how much debt they're willing to take, all sorts of stuff. And then there's there's other assets you can talk about that aren't like in that neat little hierarchy. But, hopefully that was a nice little kind of breakdown of like, hey, this is kind of how Joe likes to look at things on, top down sort of stuff, right? And then we got crypto here. Bitcoin's still just kind of holding in there. Bitcoin's just kind of still just holding in there. We're probably going to be here for a while, guys, honestly. It would be great if Bitcoin just kind of stuck at 60. I have a feeling we'll probably dip below. We'll probably at some point break this low, in my opinion. Okay. Let's just draw a little line here so that then I can eat my words later, right? Joe said, well, at some point bread. At some point we'll break this price. And then we'll timestamp 2026 0814 1452. And we'll leave it like that, right? And we'll lock it just so then I don't accidentally move it, right? And the reason why I'm saying this is because so much of the hardware is still being consumed by AI. So much of the electricity, generators, all the things that you need to power a Bitcoin mining operation is getting a lot more expensive. It's getting harder to grow those operations. It's getting harder to get the generators, the electricity. It's getting harder for you to get the hardware for the miners. It is getting harder. It's getting also more expensive. It's not so easy. If you have a ton of money backing your mining operation, sure, you can go ahead and borrow money out the frickin' wazoo. But the same people who are giving you that money are also going to want a larger interest in your business, are going to ask for more interest, either more equity, more interest, right? And a lot of businesses aren't willing to do that, but the mining operations that are willing to do that are taking more and more of the different block rewards. It's hard for a lot of people to compete now in the mining space. The mining space is generally becoming a more and more, it's still quite decentralized, but the big players are holding firm because they're big players. They have access to that money. They have ammo in their wallet to use in scenarios like this. And if Bitcoin were to go back down and crack this low, there, I think, would be generally small to mid-size operations that would probably get hit on the harder side financially if we broke down here. And if you know anything about what recently happened with that AI mining hedge fund that blew up, that was worth a few $1 billion, right? They had to sell out to Citadel. But what happened for like the last few months before that fund blew up was several financial, you could say, competitors from other firms figured out that they couldn't withstand a 20 or a 30% drop because this hedge fund that blew up was leveraged to the tits like 4-5 times or something. So a 20 to 30% drawdown turned into, you know, like a 70 and some say like 100+% drawdown. So they were forced to close their hedge fund because the people who they were getting their leverage from said, you have to close out these positions. They liquidated them, sold all their positions over to Citadel. And actually that guy just got more money to invest with, the guy who had his firm blow up. And this is a known phenomenon in investing, especially when you have a lot of players that have tens of millions or hundreds of millions of dollars. And this is a phenomenon also in the crypto markets, in the Bitcoin markets. So when I say we go down to here, this is me expecting that kind of similar hedge fund scenario where you're just seeing more people get flushed out, especially when people are getting squeezed like a lemon, right? You know, when life gives you lemons. Well, when life gives you really cheap Bitcoin and you could say financial opponents who are really, really into taking out a lot of debt to try and stay afloat, the lower the Bitcoin price goes, the more you can squeeze your opponents who don't have the best of finances, who are taking leverage, who are borrowing a shitload of money they probably shouldn't be borrowing, or, you know, they are just, you could they rationalize it as, I am borrowing money because I think we won't go below this price, right? They're taking a bet, and that bet is their business. And if they lose that bet, they lose their business, but they don't quite do the risk analysis. That bet kills their business. There are other things they can do to acquire just enough money or downsize just enough of their business to stay afloat and not blow up their business in case Bitcoin actually did fall another $10,000 to the low 50 handle, right? So I think there's going to be one more push lower to push out the people who are, you know, not using money the smartest of ways in the Bitcoin side of things. That's just kind of my speculation, right? And from there, we'll kind of establish this $50,000 to $70,000 range for Bitcoin. That'll go on for a while, probably up until 2028, late 2028. I mean, Bitcoin certainly could go higher or lower, but I'm just kind of spitballing here, right? I'm not actually, I don't actually have a high degree of certainty that we're going to stay in a $20,000 price range for 2 years, guys, okay? I don't have a high degree of certainty. But my general expectation for, let's say, the next bull cycle for Bitcoin would be like in 2029, maybe in 2028, when it becomes easier to get access to hardware, easier to get access to energy, easier for small to mid-size businesses and individuals to also take on debt to acquire equipment and personnel to start mining operations again. And that will be when Bitcoin's appreciating, right? And also when the hardware is more readily available. There could be other things as well. There could just be a guy with a shitload of money. Let's say he's like, okay, I made billions of dollars from AI, or I made hundreds of millions of dollars from AI. I am ready to start buying in. Sure, if there's enough of those guys who switch from investing in AI to investing in crypto, that sure could happen. But man, I sure as hell do not expect that. AI has been a great wealth multiplier for those who have been in the business of AI, and there's genuinely like no sign of that slowing down significantly or stopping. And in all seriousness, if there's like an AI crash that's going on and people's money isn't tied up into equity, the people who don't have their money tied up in equity might take a shot at Bitcoin over the following months after, if there's some kind of AI bust. But I'm not expecting any kind of AI bust. There's just too many countries that have too much of an economic interest, and there's going to be, all sorts of crazy financial engineering magic that will have to happen from people to try and make sure. I mean, Gamers Nexus has a whole thing on how money is getting like sloshed around between all these firms to make sure that the money wheel keeps spinning, right? Man, those are some crazy videos, some crazy little reports there. But yeah, I don't want to keep rambling on for too much longer. We've now been going on for our dedicated weekly hour. And yeah, Harold, I see. Yeah, Panama have upped their fee to $1 million a passage. Well, that's because the Jones Act was suspended, and there's a probability that they will continue to suspend the Jones Act again. And the Jones Act allows non-U.S. ships to deliver from one U.S. port to another U.S. port. So you can't like have a ship from China come to New York, pick up something, and then drop it off to, Portland, Oregon. That has to be a U.S. flagged vessel. However, that was a law by the Jones Act that was the case. Now the Jones Act it's still a law, but it's currently suspended under this administration. And now that it's suspended, a Chinese ship can come to New York and then go through the Panama Canal and drop off stuff at Portland. And this has massively increased the amount of ships going through the Panama Canal. So more ships want to go through the Panama Canal, and the Panama Canal has a whole bidding system. If you want to go through the canal at the time you want to go through in the slot you want, you need to bid for that slot. And the bidding goes high. The bidding goes very, very high. Yeah, it does. But also, there's been a drought at the Panama Canal for a while. So they haven't been able to take as many ships as they actually would have wanted to. So that reduces the number of slots. And so when you already have this bidding going on for slots and there's less slots available, well, you're kind of really screwed. Now you're really bidding more for those canal slots to get through to the other side of the canal. Real quick, I want to check out the yes. Look at that, man. It's just up and to the right, man. It's been doing phenomenally. And I sure as hell, yeah, we're probably gonna go up. We're now Going up, 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 and away. Let's check out timing dots real quick. And that's where our cluster of dots is. So still up and to the right. This is the first time we have cracked 7,800. Well, first time we've closed above 7,800 on the S&P. So yeah, another all-time high, another day. Okay, you guys. I'm going to say thank you all very much for watching. I see more and more people are watching these shows concurrently. More and more people are liking them. Please remember to like and subscribe. And if you enjoy my commentary, please make sure to share it and come hang out with me. Come ask me some questions. If you got any questions about the indicators, if you got any questions about the analysis, about the outlooks, where we get the research from, a lot of it is for free in the Discord, Plan the Profit Discord, which you can join. It's the Trade Research Discord in the WAP. And if you want these indicators, it's $100 a month. You can try them out for 2 weeks for free. All's good. All's good. Okay, you guys. I will see you all in a bit. Take care.